Righto, buddy miners, the what would you say, the Matty GC show continues.
It does. It's Super Bowl Monday and it's Tariff Monday as well.
Oh, is it Super Bowl Monday?
I think it is today.
Oh, is it?
Isn't it the first Monday of February?
Super Bowl.
Oh, shit, no. Next week.
10th of Feb.
Next
Hey,
week.
we got an American feel today. Don't do that to our American audience.
My bad.
Oh, mate, we are going. It mightn't be mining related, but it bloody is if the whole market goes up or down a shitload. The Trump tariffs.
Yes.
Big news. And the land of opportunity we live in, GC, that a humble New South Wales country boy feels that he has the right in this digital world to talk about macroeconomics in US.
Introducing Macro Matty today.
Why not? It is friggin' brilliant.
Love it.
Mate, we've got a bit of bloody Westgold expected news, you'd say.
Yeah, bit of Westgold. We've got our regular quarterly name and shape, and then a few others around the grounds as well. So
bit of bloody M&A near Westgold. Buddy, I'm just ripping the director's special sum up again at the end. Why work? Don't
We've
work
already
harder,
done the
work
work
smarter.
this morning.
That is right. Right, let's go over it. The Trump tariffs that sort of come in, I think it was the end of market on American Friday. So effectively is imposed 25% tariffs on Canada and Mexico and 10% on China. And then you got, this is just sensational, China, Canada and Mexico saying they're going to retaliate with tariffs on the US as well. And Trump's like, fuck you, I'll just double them then if you do that. Like, it's like, what a bad dog.
It's like proper primary school antics.
Yeah. But
on a global scale.
They were saying that the energy, I've read from a couple of different sources. One source has said just the Canada energy would only be tariffed at 10%, not 25%. So like oil and uranium. I'm not sure if that'll apply to Mexico as well. Because for reference, the oil that US imports, about 70% of that import comes from Canada and Mexico. So the US bloody produces way more than it imports. It produces 50% more than Saudi Arabia, as you can see here. But it's like for what they do import to maintain the energy in the country, majority of that is Canada and Mexico. So, mate, tell you what, if you like poker machines, have a look at this. The US debt clock.
Oh, the old debt clock.
Oh, I'll play the actual video. Oh, I was just thinking $10 features on Where's the Gold when I'm bloody looking at it. So it's pretty much for the podcast listeners, it's all the facts and figures for US debt, budget, spending in the US. So $36.4 trillion of national debt. And because that debt ceiling just went over 36.1, I think it was end of last year or start of this year. So, and look, these tariffs and the whole Musk Doge thing, this is all to, one thing's probably to have less of a trade deficit, but the big thing is servicing this
debt,
bloody national debt. And I think 8 billion of that is actual foreign debt. So then, because they're looking to get, $5 trillion in federal tax revenue for the year, but Medicare, Social Security, defense, mandatory spending, and the interest make up $6 trillion alone, and they're expected to spend $7 trillion total. So already $2 trillion in the hole again.
The fact that we're talking in trillions.
Friggin' huge. So, how much are these tariffs going to bring in? Because Big Trump's marketing it like, we're going to bloody be the richest country again and pay off all the debt, and these tariffs we're going to do it by tariffs. But how much is this actually going to equate to? So, and remember, it's not the foreign countries paying America this money. It's the US companies that are importing stuff get charged the tariff. So it's not like China, Mexico, and Canada aren't paying the money. It's the companies importing the goods, which means they're just going to
import as much from those countries if they have to pay all these extra tariffs on their products. Or
they will just pass on the tariff to the consumer, which is the more likely, because there's going to be a bit of both. Which is inflationary. But I guess but then, as you said, will the demand be softened for all these other products and less spending because of less demand, and that'll counteract the products and counteract the tariffs and be deflationary. So maybe nothing will happen. Who knows? It's like the interest rates might go down or they might go up. Who bloody knows?
Might be one big circular reference.
Or it might just do nothing. So it give you the facts and figures of how much is actually coming from, China, Canada and Mexico. So in 2023, US imported 3.83 trillion worth of goods. China, Mexico and Canada made up about a third of that, Mexico being the largest, which is surprising. You wouldn't think Mexico would be the largest, but Mexico is the largest. And because you can see here in the last 2 years how the US trade deficit has, kept increasing. So the numbers are, 400, I think, cut me screen off. Oh, bloody mobile view. Mobile view again. Let me bloody get that. Okay, there we go. 475 billion from Mexico and bloody 420 odd from China and Canada each. So let's start with Canada. So $500 billion of imports, nearly, bit below. Crude oil is the big one. 92 billion. So followed by vehicles, parts, machinery. Machinery is said to include nuclear reactors as well. And Canada is the biggest source of mineral imports for the US, like coal, uranium, aluminium, nickel, zinc, copper.
Literally a bit of everything.
Yeah, so that's obviously going to really affect that. Next up, Mexico. For the 418 billion imported, the big one is vehicles and parts because your Ford, GM, Nissan, Volkswagen, Toyota, all them have factories in Mexico now.
Mexico, okay.
So obviously cheaper. And funny, half of the imported fruit and 2/3 of the imported US vegetables come from Mexico. So maybe this will help the farmers over there as well.
Right. What about China?
China. Well, it's easy to guess what the biggest import out of China is. Electronic equipment.
Yep.
Since most bloody iPhones and tablets and iPads and everything's usually made in bloody China. So that accounted for 126 billion. Then also 86 billion on machinery, nuclear reactors and boilers, whatever. I assume that's not kettles. It's probably some of
the industrial side of things, yep.
Now, just simple maths, assuming, which will not be true because let's just assume the exact same amount of stuff will be imported now that these tariffs are in place with a bit of a rough bush maths discount for energy tariffs being reduced. Like for that 1.3 trillion imported from China, Canada and Mexico, imposing these tariffs would bring in about 250 billion. But considering just the interest payment on the debt is 4 times that.
Yeah.
And then the deficit between the spending and the income tax generation is about 8 times that. So even after doing all this, the debt will still grow year on year unless depending on how much Musk's Doge efforts wipe out whatever spending. So it's not, these tariffs aren't just going to magically pay off the debt at this level with just China, Canada and Mexico. It's the way it's being marketed.
Using those sort of bush maths assumptions, it's sort of barely a portion of the interest component, let alone
not even
else.
A piss in the ocean, GC. Because they talk like they think of fuel prices are probably going to rise by 50 cents a gallon over there. Look, it looks like an iPhone will cost 10% more. It doesn't even, because he's talking about bloody dropping, like removing income taxes and making it all back with tariffs, but then it doesn't take into account, I guess, the effect on the GDP if there's less demand for US products if those other countries then impose tariffs on them too.
Yes,
because it's essentially a bit of it could be a huge trade war on our hands here. So. I just reckon something freaking huge is going to happen in the next few years. Like, because you imagine the US being the world's biggest economy. Imagine if they don't, because they haven't yet raised the debt ceiling. Because I think Trump's trying to get rid of the debt ceiling, just say, nah, she's all good. We'll just lever up like anything. But can you imagine if they don't raise the debt ceiling and I'm sure, what would they say, too big to fail? But imagine if the US, there was risk they were going to default on their debt. That would just be...
that'd be scary
That is
It would be just a little bit more than just a correction
Oh,
if that were to happen.
and even if whether these tariffs, if they're going to rise rise the cost of living and energy and stuff in America in the short term, before all the American supply chains and stuff in the country gets established to not be relying on these other countries. Could it force the US into recession? Mate, have a look at the history. We might be due for a correction. Have a look at this play. This is the ASX 200, so it's probably not as reflective as the S&P 500 because of the dividends. But look, you had GFC, then you had the European sovereign debt crisis, 11, China stock market crash 2015, COVID 2020, that was a short, sharp and ended up flying after that. Then Russia, Ukraine, but we've been on a bit of a tear since then. Is there some volatility on the way with this potential bloody trade war?
And I would not be surprised.
Dow futures are down for tonight, mate. This is what do you reckon? This is going to be freaking huge, and it has effects on everything, like mining, just everything.
Well, that's the thing. It's only just really started, right? I mean, Trump's barely been in the door a couple of weeks. And then, the reactions from the other countries, will there be more to come? But like you say, it's what's going to be the impact on the demand of those sort of foreign products into the US, but then vice versa, if there's revenge tariffs kind of added back, how does that affect the US? But how does the net outcome kind of wash out? And I think we're really only just at the beginning. But what do you think's how do you think this all plays out, or what do you think it could impact, back to sort of our world, like resources and mining and that sort of thing?
Well, like uranium's going to be an interesting one tonight, I think, considering what is it? I think US imports, I think 25% of US's domestic uranium needs comes from Canada. So I know they're saying that maybe 10% tariff on that. Like, will utilities budget that or not? Like, will that change how the supply demand dynamics of uranium or where it's being sourced from? Like, don't know. That's going to be or will it just be passed on in as higher power prices? Will Canadian uranium be less competitive if the US aren't buying as much of it? Like, it's who knows? Gold. If all the money's going to flow out of those commodities, or any just is going to, like Tesla, for instance, imagine if they, and they're because that's where the big money is in all these big US companies, the big seven. If money starts flowing, because if they put tariffs on America, so saying for us to buy a Tesla now, to import a Tesla into another country, that's a tariff. So that could result in less demand for Teslas, so that money would flow out of that. When where's it going to flow into? The risky, the safe haven of gold. So this could be huge for gold.
Yeah, and especially all the volatility.
And if it's going to strengthen the US dollar, that's even, I suppose, strengthening the US dollar, that's good for everything in the mining space, really, because everything's in bloody US dollars.
Yeah, well, yeah, if you're an Aussie company, converting from a, US dollar gold price to Aussie dollar gold price, then yes.
Yeah, US copper price, US, yeah. So they may imagine getting an extra, just a nice 10% on your commodity price.
But then if you've got your costs still in Aussie dollars, then that's pretty neat, right?
Most of it is, considering wages are probably a good chunk of it.
Yeah.
So we will wait and see. Oil will be an interesting one, since I'm bloody. I have to give it. I should ask the landman actually. And it'd be interesting to see if it becomes more, because the West WTI price rose more than the Brent price. So is this going to mean the West Texas, the patch is going to be in more demand for that oil compared to your overseas oil?
Overseas, yeah.
Not sure. So, mate, things are going to be volatile.
That's for certain.
Mate, that's pretty much, if you're a mining company listening right now in Australia, like business interruption insurance for cash flow volatility, that insurance policy is needed right now. CRE insurance brokers.
Get it broke by CRE.
Get a business interruption, because, mate, it just, who knows what's going to happen. But the one thing you can control, GC, is your insurance policy for it.
Absolutely. I wonder if we'll have to ask Tari that whether Trump antics is an insurable event. I'm not sure about that, but I'm sure the CRE team will know.
Oh, I reckon they will. He will. I don't know. There might just be some premium volatility. Tari's the man to ask about mining insurance for that sort of stuff.
Absolutely.
He might talk to the underwriters and get them to create a Trump antics insurable policy. So
who knows?
Think of CRE insurance like a road. Like, because you go outside of CRE insurance, you might end up with a bloody gravel road. You go, and the only way to convert a gravel road into a bitumen road is with tar. Steve Tar. Just get yourself a bloody freeway via CRE insurance brokers.
Go CRE.
Oh,
you're
mate,
killing me.
Westgold FY25 guidance downgrade, GC. We sort of thought, I think when we looked at the quarterly, it was like, well, either they've got to produce a shitload of ounces in the second half, or their guidance is going to be downgraded.
And it's very much been the latter. So, so Westgold come out today with a downgrade across the board for FY25. So production, all-in sustaining costs and CapEx. The share price reaction, it got hit pretty hard.
Back in the 220s now.
Yeah, off about 12%. So it's actually trading closer now to where it was when they actually announced the original Corona deal back in April last year.
Yeah, wow.
It went as high as the sort of low threes you can see in sort of like November, December, and then, back to the 220s now. So the actual downgrade, what was it? So previously they were looking to produce sort of 400 to 420,000 ounces for FY25. Now that's 330 to 350,000 ounces. So it's quite a
huge drop.
Yeah, pretty decent sized drop. But, commensurate with that, obviously all-in sustaining costs per ounce have gone up. So from a midpoint of $2,150 an ounce to $2,500 an ounce. And they've also pulled back the growth CapEx estimate as well from $235 to $200 now.
So pretty much because they're not making as much money.
But I think they're just trying to redirect, or they sort of explained in the release, they're trying to redirect capital to where it's absolutely needed as a priority, given the pretty chunky production, pullback.
Yeah.
But interestingly, in hindsight, I had a look at their quarterly from the one just gone, and like, typically most, mining companies will, reiterating guidance, on track for guidance. There's none of those comments really in the release, which, where production was a bit weaker than the street expected for that quarter. In the actual quarterly call, Wade had this to say about guidance, is sort of in response to questions about it, which is probably a little bit of a tell of what was to come.
Obviously, a key question. There seems to be multiple questions coming through about guidance. Let me be clear about guidance. I mean, our business is kinetic. We are monitoring the opportunities every day in terms of optimizing this business. But guidance, in some sense, is a single parameter. We don't have a single parameter business. We have a multivariate business. And for me, the key parameter to focus on is free cash flow. We have doubled the scale of the business. We've now got a team of 2,100 people working. We've got a portfolio which some areas has been underinvested for 10 to 15 years. Certainly that is the Higginsville area. And what we're trying to do is work out what is the key driver. The key driver for this team is free cash flow. So in terms of our confidence about delivering guidance, I just think it's a very narrow window. To me, the guidance number is interesting, but what I find more interesting is free cash. We will spend the shareholders' capital to generate the highest free cash. that's what drives us, and trying to look at the business on a 1 year basis, I find a little narrow.
So yeah.
And
I
so
wonder why they didn't release this with the quarterly. It seems to be the thing that's being done at the moment. But wonder why the guidance isn't updated with the quarterly.
yeah, I don't know. That's an interesting one. You've seen other companies say, IGO as an example, they put those announcements out about the, impairment for Kwinana about a week before the quarterly.
Yeah.
Or some people sort of put the quarterly out and then put that. I don't know. Yeah. I'm
Yeah,
not
but this
too
is
sure.
this was even after the quarterly. Like there was, I think they released they had a pre the quarterly, and then this one comes after it. So
yeah. And
anyway,
I think, like you mentioned, Matty, to be fair, most people were expecting, off the back of that December 24 quarter production result, they're expecting a guidance cut, but probably perhaps not
much.
by this much. So what was the reason for the downgrade? So in a nutshell, the ramp up of Beta Hunt to 2 million tonnes per annum and Bluebird South Junction to 1.2 million tonnes per annum were slower than planned. And they specifically pointed out that this was predominantly due to engineering, not mineral resource issues. So Beta Hunt, they were sort of doing a lot of, big upgrades to the primary ventilation, mine pumping systems and clean water supply. Bluebird, they were transitioning from a different mining method, which was sort of happening slower than expected, due to upgrading the ground support regime there.
Did they upgrade the ground support supplier or the actual regime itself?
They didn't actually say in the quarterly.
Maybe they just converted to Sandvik.
Maybe.
Ground support. Not, I nearly said, it's hard not to say DSI. maybe that's what was it.
With Joe occurred.
But that wouldn't, no, it mustn't have been. They must have actually put more bolts in and stuff, because if they converted to Sandvik, everything would have went quicker.
Potentially.
Yeah. So, it's bloody, Derek.
Give the guys a hand.
Must just double check it is Sandvik going in at Bluebird. I'm sure it is. It has to be. 400,000 ounce producer these days, GC.
Yeah, getting close to it. Getting close.
On the road too. Guarantee that production.
That's
with
it.
Derek. Thank you, Derek. I think so. Transverse means, are they going? They got pace fill there? I'm not sure. I'll have to check that, because I know that transverse is when they, instead of going from one end out, you're sort of hitting it, taking like bulk, like take every second stope, then you come back and take it in between it after you pace fill them and stuff. So I'm not sure if they, I'll have to have a look into that.
But yeah, I guess, the market reaction was, pretty telling today. But do you reckon they were perhaps a little ambitious on the timelines to achieve what they wanted to achieve at Beta Hunt and Bluebird with these ramp ups? I mean, they're obviously on their way and they're making good progress each quarter, but not in the sort of timeline that they perhaps anticipated. And I mean, it's certainly not easy stuff to do either.
I think it's been a bit of a long. I think this is just, as Paul Keating said, the recession we had to have.
It feels like that, doesn't it?
I think because they went through that period of the cash on quarter, like there was that nice graph. It's like Westgold's had they've on this trajectory, like they've, good, like, what do they say? Margin over ounces, and like they were really reborn, you'd say. But I think what was that at the but we always saw the payables were increasing. Like there was just that. It's like, could it be sustained forever? And it just looks like they, the script value was good. Like that obviously helped with the Karora transaction. Like they got the majority ownership of the pro forma, and but now it looks like, right now that they've got it all sorted, is everything getting reset a bit?
It very much feels that way.
Yeah. So as we said, it'd be interesting when we look at the accounts. Maybe like Karora was, they had to as I said, they're doing a lot of
Sort of
upgrades
set it up
needed
for the
to.
future a bit as well, which I mean that's a lot of time and capital and things like that. But that's the thing, it does take time, and it seems to have stretched out a bit more than perhaps they originally anticipated. And look, they sort of made a couple comments, sort of looking forward for the rest of the year and next year. They are obviously expecting a better second half for the financial year, and they reckon Q4 FY25, so the June quarter, should reflect an annualized production rate of 400,000 ounces per annum. I think the interesting thing to look at the near term will be the impact on cash. I know you guys touched on it a couple episodes ago. You know, they closed the December quarter with 152 million of cash, bullion, and investments. But in the quarter, they also drew down 50 million of that $300 million corporate facility they have. So with lower production, a higher, cost per ounce, a little bit less capex, do you reckon in this sort of coming March and June quarter, we might see them draw on that facility a little bit more again? Obviously, noting as well, the gold price has gone up about $250 an ounce Aussie since the end of the December quarter. So that'll help. The midpoint of that all-in sustaining from original guidance to now revised guidance went up $350 an ounce Aussie.
Yeah.
What do you reckon?
Well, you think of you do a bit of bush maths on the margin they'd make. Like, God, if they might get a realised price, like gold's just hit 4,500,
I know.
and they're fully unhedged. So, like, even if they're producing at 2,600 and they're producing friggin' they got 100 and nearly 200,000 ounces to come out in the next half. Like, that's some decent freaking margin. Like, they should be making at least 50 mil a quarter, at least. Like,
And-
even considering the growth capital they've got.
Yeah, there's still, I mean, that's certainly not a small bill there, but it is not what they're guiding towards for the second half is it's not as big as it was in the first half.
Yeah, so God, they'd have to really blow it, not get the ounces, blow the costs out and everything to not make friggin' good buck. Like, they should have a good couple of quarters. I would like to see them go to a contractor model. Now that they're getting bigger, 400,000 ounces, that's a pretty big bloody producer, and they're running it all themselves as their owner operator, which they sort of inherited that model
Yes.
from previous world, but because they bought ACM because ACM was the contractor at all their sites, and there was I think it was a risk that ACM was going to go under, and so they pretty much had to buy them so their operations didn't go under.
Yeah, I wonder whether that'll change.
But
going forward.
but you look at all there's not many owner operators.
Yeah, that's for sure.
Of this scale. Like absolutely, like Alkane is, I think, over east.
Yeah.
But most of them have contractors in, and it's just because you obviously get there. They've obviously got a lot of experience working for them, but you just the supply chain logistics and everything's got their separate divisions that can and they can just focus on design and ounces and execution, and then the contractor picks up a lot of the brunt, whatever
of the grunt.
Yeah. So look at every other gold miner's got either Barminco or Burncut doing the contract for them, or Develop or bloody whoever. Well, Develop's only at Bellevue, but yeah, that's I don't know if they'd consider that for the future to I think it'd simplify the business at this scale a bit. So
yeah, and that's something they talk to a lot about, sort of simplifying the business, making their existing sort of operation hubs, bigger and better, you know, maybe that sort of forms part of it. We'll have to keep an eye out. But I think that the very much the takeaway from today's release, you know, while yes, it is, you know, obviously disappointing, but you know, the revamp of the business, it's still progressing, but it's just taking a bit longer than they originally expected. So
Yes.
hopefully, later this year will be the real sort of inflection turnaround point for them.
Yeah. And as I said, it just even on those numbers, are just
Are these gold prices? Oh,
surely they should make a good chunk of cash.
you'd think so.
But it's if they clear and payables would be big one, which we'll get a bit more colour on soon. So
That's it.
yes, right. GC, the quarterly name and shame.
It is that time of year again. Quarterlies, name and shame. So, for context, for those who aren't too familiar, mining companies, so like non-producers, have to put out an Appendix 5B, which is basically their quarterly activities and cash flows by a report, essentially, by no later than the last day of the month following the completion of a reporting quarter. So, for example, 31st December was the end of a quarter. They've got till no later than the 31st of January to put out their quarterly report. And naturally, there is a bunch of companies that leave this to the last day possible, but there's even a good chunk that leave it not just to the last day possible, but to literally well after market on that day as well. And the thing that baffles me is that this is not new. It's not a surprise or some new revelation that mining companies need to report by a certain time each quarter. This has been in place for ages, so why leave it so late? And so I've got a few friendly suggestions to help get your reports out in a bit more of a timely manner. So Officeworks has got some great 2025 calendar diaries and planners and compendiums as well. That's exciting. I had a look on YouTube how to set reminders in Outlook 2025. There's a few useful videos there. And I mean, if you're really stuck, you can always get a little carrier pigeon or something to remind you on the 30th. Remember, quarterly report due tomorrow. Who knows?
To be fair, I'll play devil's advocate there, because if I was doing it, remember at like uni when you got an assignment due?
If you've technically got till 2 p.m.
Yeah, and like quarterlies, I would imagine, are an absolute, they're like a uni assignment.
It
You'd
is
be
a
like,
bit like that.
fuck, I've got to do the quarterly, I've got to write all this stuff, and work better under pressure right at the end. And
I like the uni assignment analogy.
If I'm ever bloody running a Spivco GC, I can guarantee I'll be a regular offender on this
list
segment.
Oh, let's love it. So, all right, let's do a rapid fire on the 10 latest quarterlies that came out this quarter. So, this morning, which mind you, today's the 3rd of February. Dateline Resources takes out number one spot.
Go Dateline.
Funnily enough, the announcement's actually dated the 31st of January, but it came out today. So they must have tried to get it in last minute last week, but obviously missed the cutoff or something. And they're currently suspended due to the late lodgement of the quarterly. 7.5 million market cap company. They completed a scoping study on their Coliseum gold project in California during the quarter. Finished with 1.8 million cash and half a quarter's worth of funding left to go there.
Not too bad, 1.8 million. Yeah.
Then you got in second place at 8:23 p.m. last Friday. These are all Sydney times, by the way. Lithium Energy. They were a previous offender last quarter. They're still suspended from trade since about a quarter ago because ASX believes that the recent sale of their Solaris lithium brine project basically it constitutes a disposal of the company's main undertaking.
So you can't even be a shell.
Well, no,
no.
not really, no,
God.
because they basically that suspension will stay in place until ASX believes it's got basically sufficient operations to justify a requotation or recomply with the listing rules. So basically, buying a new asset.
Oh, geez, I couldn't have been. Well, and why the fuck would you get the quarter out early if,
if
you're not
that's
even
the case.
trading? Yeah.
So they're spinning out some graphite assets to be approved by shareholders this week. Fortunately, they should get a bit of cash in the door from all these various deals, assuming they all complete, to find a new asset and get back on the ASX boards. They finished with 1.6 million cash.
That'd
into
be
this
that'd be
quarter.
annoying being suspended, but still having to do all this shit. Like
Yeah.
it's like you may as well just be private.
Yeah.
Oh,
The
who's up
woes
next?
of ASX. So also a 8.23 p.m. Scorpion Minerals, 7 million market cap. They're exploring for gold in the Murchison main project Pharos. They also have a copper prospect as well. They spent a grand total of $38,000 on exploration and evaluation this quarter. And they had a grand total of $1,000 cash at bank and 1.2 million of a 2.5 million unsecured loan facility drawn into the quarter.
They're in
Very fun.
7 mil market cap's pretty high considering $1,000 in the bank. They must
Yeah.
have something all right there.
It's crazy. Then we've got coming in at 8:20 p.m. Alara Resources, 24 million market cap. Had a big run up to about 8 cents when they commenced copper concentrate production at their copper gold mine JV in Oman back in April. And I think copper had a bit of a run back then as well, but they've sort of retreated back to the mid threes. Main drama was when they went to raise $15 million during the quarter via a rights issue. A few weeks after they announced that, they copped a takeovers paddle application put forward by a group of shareholders, which in a nutshell was basically saying if the rights issue went ahead as sort of proposed, where Alara's major shareholder, Al Tasnim, was fully sub-underwriting the rights issue, it would amount to unacceptable circumstances that would see, Al Tasnim, get a substantially increase, percentage holding of the company. Alara then withdrew the rights issue in December, citing, termination of the underwriting agreement for the raise. Then in January, the takeovers panel determined the rights issue would amount to unacceptable circumstances, but the raise was already withdrawn by that stage. They finished the quarter with 9.8 million cash, but around 103 million in debt owing.
Oh, right. 803. We're still in the eights.
We're still in the eights. Strike Resources. So they were
not Strike Energy, Strike Resources.
Yep,
the
different
iron ore
company.
one. Yeah.
So they were a previous offender last quarter. They released at 8:15, so a 12-minute improvement. So it's kind of good, I guess.
Might be in the sevens.
Might be in the sevens next time. To be honest, not so much has really changed with them. There's still a 10 million market cap company with an iron ore deposit in Peru. The only announcements between last quarter and this quarter was the results of their AGM, and Peruvian ministers discussed collaboration on Apurumag, apologies for the pronunciation, project development, i.e. we had a good meeting. So then they submitted an environmental impact assessment submission for a drilling program, but not really much exploration activity has been happening the last few quarters. Not bad cash balance for microcap, about $5.5 million. But, I mean, to be fair, there hasn't been too much spending either.
Yeah, right. 803?
WA Kaolin.
Oh.
They're a sort of small kaolin producer out of WA, and they're currently in a halt doing a raise. And they actually had this in their quarterly report on Friday. There was an extract of sort of a few comments in the finance section there, but last bullet point says, the company intends to launch an equity capital raising on Monday, the 3rd of February. So got the heads up on that one.
Oh, but that was aftermarket.
It was aftermarket, yeah. So
good honesty.
They had some improvements in operations. They successfully commissioned some new classifiers that they planned, but, sales volumes were, nothing hectic. They sort of got $837,000 of revenue for the quarter. So,
do you think bloody did Discovery Capital do the raise?
I'm not sure.
I
actually.
thought Kale would do it.
You're just on fire today with your dad jokes. I love that.
He'll love that.
He will too. GC. So, 802 African Gold. It's quite literally in the name. Just very to the point. I love it. They had a big run up to about 10 cents back in October off the back of some assay results at their Didivi project in Cote d'Ivoire. And
some promotion.
Yeah,
that was like outlined as better promotion on the way.
Yeah. So they reported an ex-Rio Hancock Oz Minerals guy, Adam Ullman, as a new CEO during the quarter, doing lots of drilling. Got some pretty interesting results there so far. Another rig coming to site this month, but they only finished the quarter with $1.1 million. So Good
Gee,
luck, African Gold.
So I cannot believe there is a 14-minute gap here. We're down to 7:48. We've gone from 8:02
Yeah,
to
we're in the
7:48.
sevens now.
But that's like 14 minutes. Like that is a big gap of no announcements.
Yeah. No
Right.
quarterlies. at least
Savannah
anyway.
Goldfields.
Another company in Hull. They're currently raising $14 billion, just shy of
Ooh.
$6 million market cap. We're in suspension for a good chunk of the end of last year.
So raising 14 million and a 6 mil market cap.
Yeah, no, so it's a lot compared to their market cap. They've apparently been trying to sort out funding alternatives for the last few months to tidy up their balance sheet and restart gold operations, which those gold operations have been suspended sort of since early last year. They've been making amendments to their debt facilities. They're trying to make amendments to their convertible notes. They're just trying to whack everything at their sort of funding and balance sheet situation. So today's raise is going towards funding the restart of their gold operations. But prior to that, at the end of the quarter, they finished with $2,000 cash in the bank, but owing $8 and a bit million in debt.
Oh, Jesus. Jesus, right. 7:35, Cosmos Exploration.
Cosmos. Well, what do you know? They're all in halt to raise some dosh today as well. It's a bit of a trend today. Also, small, $6 billion market cap. They entered into an option agreement to acquire a private lithium company located in the Lithium Triangle. I found out that's somewhere in South Africa, basically. Sorry.
South America.
South America.
Yeah, no, that's the like the Atacama.
Yeah.
Yeah, that's the good shit.
But I'm not really, on a quick read, I couldn't really gather what this company actually does. I feel like it's something to do with lithium processing tech. They finished the quarter with just under 200 grand cash. And lucky last, there's Anika Tambang or Antam, 734.
Sounds like a person.
I've never, to be honest, never heard of this company before, but having a look into it, it looks like they're quite a big Indonesian sort of miner and process a range of different commodities, gold, nickel, bauxite, and the rest of it. Their main listing looks like to be on the Indonesian exchange with like a small dual listing on ASX. So I think it's like 3 or 4 billion Aussie, equivalent market cap. Which it's strange. It's not the sort of company we normally see in this segment.
They probably just forgot they were fucking listed over here.
And it's just like, oh, geez, we better pop that out.
It's got a text. So yeah, right. Maybe it was in the diary.
Maybe it was in the diary. I love it.
One of the pigeons.
Oh, one of the pigeons.
Oh.
So there it is.
Good work,
That's
JC.
this quarter's name and shame segment. But yeah, I think you just got to take it with a pinch of salt and have a bit of a laugh with this stuff.
I love it. I'll do the exact same, guaranteed. Right. Other news from the director's special.
Moneyandmine.com.
Oh, just the Matty's lazy way of giving you the news.
I mean, probably the other interesting one was Terry, CEO from Resolute.
Yeah. God,
leaving sort of effective immediate.
Yeah, and it was hard to figure out because you see in the wording here, the company and Terry are discussing the terms of a proposed settlement in connection with his termination of employment. So it sounds like he I think I interpreted it the other way, but it sounds like he said after being locked up in Mali, he's like, fuck this. I've had a gutful.
I think that's a reasonable read through.
Yeah. Or his missus says you're not going there ever again.
Yeah,
and you are staying put
probably
in,
not
which would be
surprising.
fair enough.
Yeah, absolutely.
So that was obviously very trying times for the individuals and the company in Mali. So yeah, I think stock's off 9%.
Yeah, no, it was off a bit today.
So take that as a compliment, Terry. But yeah, so
Chris Eager, who was the acting CEO, he's now going to assume the role of CEO there at Resolute.
Oh, down to the wheeling and dealing section of the bloody
a bit of
director's
small
special.
cap gold M&A.
Astral
How
and
good.
Maximus merging all scrip off market takeovers. So that's because Maximus have got obviously Astral got, I think it's 1.27 million ounce resource.
Mandela,
I think it's exactly that. Declare will be bloody proud that I know that. And next door to them is Maximus, who have got like
And it's
effectively
quite literally next door.
The old Wattle Dam, which is what Ramelius made a shitload out of back in the day before it just all the high grade gold just stopped. So yeah, they're I think they're consolidating now for 1.8 million ounces total resource. So that's all the ground in and around. That's an interesting district in terms of close proximity to the St. Ives mill, because Mandilla's a pretty decent like gold. It's one of the better undeveloped gold projects in WA.
And it's
for like big pits and everything.
One of the bigger open pit, undeveloped gold assets as well.
Yeah. So, and whether Westgold are in that region now, like obviously goldfields are a slow moving beast, so it'd be pretty hard to
as well.
do a bloody deal with them. But yeah, Westgold in that region now, that's like the likes of your Astral and your Pantoro and that, like Westgold have got a bit of shit to sort out by the sounds. While you're at it, you may as well just get all the deals done straight up now. Just do them
tick
now.
them off.
Yeah, why not? Bigger the better.
I love it, but no, yeah, to be honest, just made sense, that one.
Yeah. But it's not like for what they're especially using Astral script since they've gone up a shitload. I think Maximus is it's only $30 million, I think. The offer values Maximus about $31 million. Yeah. Won't even notice it. So, what else in the Director Special GC? Let me go back up. What else happened today?
Oh, kind of the more interesting ones.
Polymetals provided an update on its Endeavour silver zinc mine restart activities. Geez, they've had a good run. Polymetals, far out. They've had a ripper. Underground works progressing to plan. Path to first half cash flow on track. Anything else? Bloody interesting. New Merchants in Gold, the old Aura Gold, released their maiden reserve for Crown Prince. 140,000 ounces at 4.8 grams per tonne. That's not bad for a bloody. Most of that's pit, hey?
Yeah, that's a ding for me, that one.
Oh, yep, that's going into that's the secret sauce for the Westgold mill coming up.
Yeah.
So yeah, it'd be interesting to see if Westgold just buy the ore, or if they take them out, or they might just buy the ore off them.
Yeah.
Why not? Because the ore purchase agreement's out for that, isn't it?
Yeah, so I believe that's been signed, but it's subject to shareholder approval, which I believe they're looking to get at a general meeting, I think later this month.
Oh, yep.
Just because Westgold are an existing substantial shareholder, so they need to get shareholder approval for it from the others.
True North Copper. They're back in action after VA, you'd say. Was it VA?
Yeah, sort of VA, then recap, and then...
Yeah, so it's like not a Spartan 2.0, well, because Tembar are on it, but it was like, recap, Paul Cronin now there, like, so...
Is ex-Adriatic, yeah.
Yep, so they've finished the quarter with 19 mil cash, post-VA and recap raise, Cloncurry project on care and maintenance, while an extensive exploration program is undertaken. So value in the drill bit for I think it's their Mount Oxide project, where they've had the historical high-grade hits. So it'd be interesting to see what they get, because there were some bloody good hits up there. I just don't know the size of it.
But yeah, if you want more news like that, moneymine.com in your inbox every morning.
Leo Lithium completed the payment of its distribution to shareholders. It was a good chunky one, eh?
Yeah, so they'll have a bit of cash to sort of find a new project, new asset.
Yeah, very good. Go bloody Model Answer ad. How good are the Model Answer guys? GCs. I love sponsors. Look at, speaking of which, geez, we've got a few new ones to rip out
today.
We do
have a few new ones.
Mate, check out this banner. It's like it's like one of those shopping centre things, like showing which shops are inside your Westfields. Like, it's just brilliant. There's just
it is a bit like that,
companies
isn't it?
everywhere. We've got MMS, bloody Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, Saltbush Contracting, and the newbies on. Swick.
Welcome, Swick.
Welcome, Swick. Welcome, Quattro Project Engineering. Oh, mate.
Hello, Quattro.
Jeremy Palmer, absolute legend of a bloke. Cross Boundary Energy coming back for another Tim Taylor festivity.
Excellent.
And don't forget as well, if you want $100 off your underground operators ticket for Oz IMM, possibly the greatest conference in the world other than Diggers and Dealers.
Love it.
MOM 100, Money of Mine 100 is your discount code. Link in the show notes. I am going there in full conference mode. I cannot wait.
You'll be in your element.
Underground operators got like, could there be a better home for me?
I don't
cannot
think so.
wait. Adelaide, 7th to 9th April. Hootaroo, my money miners.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.